Hello, ladies and gentlemen, miners and artisans, citizens of the digital world. My name is Masimba Charles Vuma, also known as the mining superstar, and I would like to welcome you to the very first episode of Mukute Boys. I am excited to announce three rising stars in the mining industry: Panashe Goronga, Melchizedek Masukusa, and Ronald Gonye. And today we will be discussing this week's record high gold prices. But before we get into that, I would like to introduce my guests today, starting with Ronald.
Thank you for having me on the show, engineer. So my name is Ronald Panashe Gonye, and I'm a mining engineer with experience in both small-scale mining operations and large-scale mining operations. I hold a Bachelor of Science honors in mining engineering from the University of Zimbabwe and a postgraduate diploma in project management from ISPPME in Gweru. And over the years, I've worked in various roles from mine management in small scale operation and to research to in drill and blast optimization, automation in underground mining, and ESG strategies for mining operations. I'm passionate about developing small scale mining into sustainable, efficient operations that contribute to the Zimbabwean economy. And through my work, I've been involved in projects that include designing structured frameworks for mining projects and optimizing operations to maximize productivity and profitability. So basically, that's all I would say about me.
You've got some really impressive credentials. Pandashi, can you give us a summary on your background as well?
My name is Panashe Goronga, and I'm a mining engineer with a strong background in drilling and blasting. After graduating, I began my career as a graduate trainee at Eliza Minerals and quickly rose to the ranking of a mine manager within a space of a year. I then progressed to KW Blasting, where I served as a site manager for several notable projects with the likes of the site manager for New Parliament, where we were drilling and blasting a roadway in between the mountain. I was also a site manager for several projects, such as the Rain Mines, Canterbury Mines, Derbyshire Quarries, as well as Alaska Dolomite. I then progressed to being a blasting engineer at Eureka Gold Mine, and I'm currently the assistant site manager for KW Blasting at the Zimplats South Pit project, where we are mining platinum mineral. With a career spanning various roles and projects, I've developed expertise in mining operations, drilling and blasting, with a strong focus on safety, efficiency, and productivity. And I'm always in the loop to make myself exceptional in every role. This is one thing that makes me achieve all my desired goals and to meet the required targets in a more safer environment, in an efficient way, as well as in a productive way.
It's a captivating resume you've compiled. Masukusa, can you share your background with us before we jump straight into it?
Hi, how are you, Mr. Masimba? Thank you for having me on your podcast. It's truly an honor to be here and contribute as little as I can. I'll firstly share a bit about myself with the audience. I am Engineer Melchizedek Masukusa. I have a background in both government and private sector mining, having worked for the Ministry of Mines and also Anjin Diamond Investments in Chiadzwa. I also served as the regional director for Young Miners Foundation, and I'm also the former Secretary General for Penalonga Development Trust. Currently, I'm pursuing some consultancy work for Aloni Mineral Resources. So yeah, that's a bit about me.
Now let's dive into our podcast and discuss the prevailing price of gold and the market surrounding it. In your wildest dreams, would you have ever imagined that the price of gold would have ever reached over $100 a gram?
Honestly, no one could have predicted such a sharp increase in the price of gold. While we always expect, fluctuations in the prices of gold, seeing gold price surpass the $100 per gram mark is incredibly remarkable. However, given gold's historical performance as a safe haven asset, especially during times of economic uncertainty, it makes sense that we are witnessing this surge. That being said, this prize is not just a lucky break. I believe it's the result of multiple global economic and geopolitical factors converging at the right moment. Talk about the Israel war, the Ukraine war. So all that, I think, those are the geopolitical factors that could be also adding on to the price of gold that we have witnessed.
Those are some really interesting insights. Sometimes it really does seem as if you are watching the results of the butterfly effect in real time. But if we were to get into specifics, what do you think could have caused this record high in gold prices?
Could have caused this is there are a lot of factors to consider, to be honest. And for example, there's the issue of inflation and interest rates, where we are talking about inflation due to the monetary value of money. Money always loses value each and every day, and for that instance, what the investors do, or people who've got lots of money, they will rush to buy gold. So in rushing to buy gold, that means that the economics of gold now shifts to where everybody wants to store value in gold, because everybody has got that thought to say, nah, no, gold does not lose value, which is fairly true, but also untrue, because due to the changes of inflation in different countries, that may lead to an increased value in gold, or a decrease in value of gold. So it's dependable upon which the country is operating. Then there's also the issue of the conflicts between countries. For example, let's take for instance Russia and Ukraine. There's instability in the country. Let's take for instance Ukraine. There's instability. There's the political instability. It will cause a massive buyout in gold, because everybody wants to store their money in somewhere they believe does not lose value. So in turn, uh, that will increase the price of gold, because remember, when there is shortage um, of something, then there is going to be an increase in something. So that's how economics of money and gold works. When the money inflates, it means that it loses value, but in turn people rush to gold, and then the price of gold shoots up, because the demand will be high. So that's basically what's happening due to the geopolitical issues between different countries and stuff. Then there's also an issue with tariffs. For example, we talk about the United States. Gold surged because there's a rising, what can I say, the rising trade tensions between China and the United States. You'll find out that due to those tensions, people will tend to the buyout of gold, and this is as a result of sort of like a competition between the two countries, wanting to add more to their stock. But in that time, they will be adding value through an introduction of gold. Then there's this issue of people wanting to just have a haven for gold. people would tend to say, as we know from the history and all those things, that people would store gold. And remember, there's also those exchange traded funds where people would just say, go to the bank and say, no, I want gold, because they've got a belief that gold store value and is non-degradable. And this will cause, a surge in the gold prices and stuff. So I believe that these are some of the um, of the causes of a gold surge.
Yeah, your contributions have really piqued my interest. And I would like to talk about the mineral markets for the whole day, but I'm afraid that we have to wrap this up. So, as a closing statement, do you think that the price of gold is going to stay the same, or it's going to rise, or it's going to fall?
Yeah, so honestly, predicting how markets will behave is quite hard. It's quite very tricky. It's like trying to predict the weather a month from now. So yeah, that can be very tricky. But however, we can look at some signs. On one end, if we start seeing economic recovery or global markets cooling down, investors might ease off gold and start chasing after riskier options like stocks that could pull down the price. On the other hand, we also have if uncertainty keeps increasing, geopolitics, inflation, gold prices may stay hot, and demand might even climb higher. But historically speaking, gold's long-term trend has always been upward, especially when the world's a mess. So I think we just have to keep an eye and keep watching what's going on.
Thank you for that shrewd analysis, Melchizedek. And on that note, I would like to draw a close on this podcast. Seeing the average price of gold hit a high of $3,166.20 per ounce, or $100.37 per gram on Tuesday, was truly astounding. When the gold prices on Thursday finally relaxed after Trump's announcement of import tariffs, further drove investors to run to it as a safe haven. And even though central banks are expecting gold to rally with buying aimed at diversifying away from the dollar, the Mkute boys are opting to monitor the situation closely and keep an eye out for geopolitical issues occurring around the world to make better, well-informed forecasts. This is your mining superstar telling you to stay safe and tread the mineral markets carefully. Until next time.